It's time for your call sheet, where we look at the topics driving the trading day ahead. Crew members today, such a good crew. Jose Torres of Interactive Brokers, Ryan Dietrich of Carson Group, Peter Bookvar of 1 Point BFG Wealth Partners. Ryan and Peter are also CNBC contributors. We got everybody in the house today. All right, I got to start with SK Hynix because major listing here, offering coming to market at a time where a chip trade this week has buoyed everything else. So, Ryan, I'll kick it off with you.
Well, first off, thanks for having us. This is a great crew. This is fun this morning so far. So, obviously, lots of excitement, new IPO coming out. We know all that. I think what's fascinating about the market sentiment right here, Morgan, to us is, yes, there's excitement about these IPOs. But then you look at what happened last week. The stock market was down a little bit. 2 weeks ago, down, the June swoon. And a lot of the sentiment polls showed big drops in bulls. We saw more kind of worry coming. So that June swoon to us was maybe a bullish sign to kind of refresh some of the fears. And now we're on the other side of it. Maybe we'll get some good news with some IPOs coming out here.
All right. What do you think, SK Hynix, Peter? And what it says about semis in general right now?
Well, investors are still desperate for growth, and they're paying up for it. And there's no better growth right now than in semis. On the flip side, look what they're doing, the hyperscalers. They continue to dramatically underperform because they're the ones who are seeing the deteriorating cash flows. So the market is rewarding the recipients of all that spend and punishing the spenders. You look at other parts of the market that aren't really growing, and they have a lower multiple than, of course, the semis. The question, though, is the sustainability. And it's not just SK Hynix that we need to pay attention to. I would highly pay attention to the upcoming Chinese DRAM and NAND IPOs because Micron's 85% gross margin, the Chinese are coming after it.
Yeah, it's such a good point. I don't think we've spent enough time talking about globally what we're seeing with the IPO pipeline. It's not just a U.S. story, to your point. Jose, I had this conversation with Jamie Dimon from JP Morgan about a month and a half ago, and one of the things he was talking about was the fact that the U.S. markets, there's nothing like it. They're the most liquid. Everybody wants to, be engaged here. This is really like where the opportunity lies in terms of capital and raising capital. So perhaps not surprising to see SK Hynix coming here with an ADR in light of that.
Absolutely, Morgan. And right now, like Peter was saying, investors are choosing the winners and losers in AI. And right now, it's obvious that memory chip makers are doing terrific with their profits, with their margins, and they want to be positioned there. As far as the hyperscalers in the Mag 7, folks are nervous. They're burning a lot of cash, looking for cash in the balance sheet, taking out debt deals, secondary equity offerings. Folks are nervous that some of those firms may not really realize those buoyant profit returns.
You know who potentially benefits from all this? The big banks, right? When you talk about a robust IPO pipeline, all the M&A and the deal making that we're seeing, how's this going to line us up for earnings next week with the biggest names kicking us off?
Probably pretty positive. Think about banks here going on. We look under the surface, right? Community banks are leading, breaking out. Regional banks are breaking out. The large ones haven't yet, but I think it's just a matter of time, Morgan. And you just look at the consumer. Like we just released at Carson Group our mid-year outlook literally yesterday. One of our big themes second half of this year is the labor market's probably going to improve more than people think. We created 120,000 jobs all last year. We've been averaging well over 100 the last couple of months. We think that'll continue if the consumer's strong. Bank lending, all those things should play in, and there's that rotation that everybody's been talking about. We still like financials, industrials, healthcare to continue to do well the second half of this year.
Yeah. How close are you watching banks, Peter? And how much of that is going to be an indicator of what we get with this earnings season at a time where strategists have lofty estimates out there, double-digit percentage increases in earnings again?
Well, the interesting thing about banks, it's actually global. If you look at European banks, they've broken out. Japanese banks are trading really well. Chinese banks are actually doing the same because the yield curve in a lot of these countries are beginning to steepen again because central banks, while the BOJ raised rates, the ECB raised rates, long-end rates are still very high. And I think that is one of the more interesting things is this very elevated level of long-term interest rates. And with the Fed, I think Scott Bessent's desire to front-load bond issuance is keeping Kevin Warsh from hiking short-term interest rates this year, which means that the yield curve can steepen, which can benefit some of the banks.
Yeah, which of course brings us this is like perfect segue, Jose, because we got the new Fed chairman on the Hill for 2 days next week. We're getting CPI, PPI reports, so key inflation readings, and then yes, all of this does funnel back to the banks too.
Well, I think it's a great time to buy bonds. Like Peter said, yields are really high at the long end. CPI peaked at 4.2% in May. July, we're looking at 3.5%. That's likely to be low threes by end of the year, 3.13%. Now, 20-year bond yield and 30-year is trading north of 5%. So a 200 basis point spread there doesn't make sense to me. I think you want to be in bonds now for several paths to victory, inflation coming down, geopolitical alleviation if President Trump takes it easy on Iran. And I think that labor gains are actually going to be a little slower in the second half. We're going to see a little bit of a surprise. The first half has been unbelievable, Ryan.
I do want to get your thoughts on the task force names that got released yesterday.
Yeah, no, I think it's a broad committee. I think it's going to be very interesting to see whenever, Morgan, the Fed tries to pare back the QE elements of what's happened in the past with quantitative tightening, you could have some volatility in rates markets. We saw that in 2018 and 2019. We saw that last year when Chair Powell reinstituted a growing Fed balance sheet. So, it's going to be very interesting to see what happens with credit lending, inflation, the money supply.
Yeah, Peter, I'm sure you have thoughts on all of this and this idea of, what it looks like to potentially rethink some of the methodology that's playing out at the Fed.
I think it's refreshing. I think to what Jose said, what they do with the balance sheet is going to be very interesting because the balance sheet's real transmission mechanism is through the markets. And while I agree with Kevin that it's nice to have a smaller Fed presence, that could have a negative effect on the markets. So I'm not sure how they're going to balance that. But to my point earlier, I don't think the Fed is raising interest rates. And I think that's for a variety of reasons. But I think long-term interest rates, I believe, are still going to go higher because I think debts and deficits now around the world actually matter in investors' eyes.
Yeah, and it's even perked its head up this week with a NATO summit and some of the defense spending numbers that we're getting in partnerships, and everybody seems to be getting a little more creative around that, too. Ryan, I want to get your thoughts on all of this as we wrap it up.
No, let's wrap it up with this. We agree. Hope we don't jinx this, by the way. We don't think the Fed's going to hike either. At the start of the year, everyone said, how many times is the Fed going to cut? We said, no, this is an inflationary growth environment. The Fed's probably not going to cut this year. And now that we're 180, everyone said, how many times they're going to hike? We don't think so. Now, I will say, to push back a little bit, since you pushed back on the stronger labor market the second half of the year, we think inflation is going to stay sticky, right? Yes, the headline's coming back because energy prices are coming back. We get that. But look at services, look at goods prices. There are reasons to think that inflation stays probably stubbornly high, but the Fed's probably on pause. How we see it.
All right, 20 seconds left. What would you buy right now, Ryan?
Oh, right now, I would say growth. I mean, growth's pulled back. We get it. We talked about it, but I think growth, got a lot of earnings come out. That Mag 7, everybody hates it now, the Lag 7. We like that area probably second half this year.
Okay.
Energy stocks.
Okay.
I think it's a gift here.
All right, 5 seconds left.
Treasury is high yield.